Hello everybody, today we're going to be taking a look here at ticker symbol QCOM. Qualcomm's announced their first quarter results for 2024. We're going to be using their 2023 to estimate a fair value for the company. They had a gap of 2.46 and then non-GAAP 2.75. It exceeded expectations. You can see their net income right here, their revenue, their earnings before taxes, and their diluted earnings per share of 2.46 if we're using GAAP, which is what we kind of want to look at. I'm more interested in GAAP on companies that are net income positive. But as you come down here, you can see their revenue stream, where it came from, which sections. They also have a business outlook for the Q2 guidance right here. So, QCOM did pretty good. They had a pretty good Q1 earnings. So, we're just going to go ahead and dive into things. We're not going to dive into the report. We're just going to try to come up with the fair value. We can use their free cash flow since 2014. It's pretty consistent across the board. Some outliers with the 4,000s compared to the other years, but the real outlier is the 12,000. And then 2023, most recent year, is the 9,000. And these are in billions, by the way, but I'm just saying it because for the way that it works, we do these in thousands to do the calculations instead of in billions. So 6% growth rate, because that's kind of what is projected between 6 to 8% by most analysts for the next 2 years. So we're going to go with the 6% growth rate. We're going to use an 8.5% discount rate due to the current economic conditions and things starting to cut interest rates. So we're going to use 2% perpetuity. 1,126 outstanding shares. QCOM is a business that likes to help shareholders by buying back shares so they're consistently going down, which is always a good thing. So we come to a discounted cash flow price of $137.18, which is very similar to its current trading value. So we would want to give ourselves a discount rate of at least 10% so we can make some money. So $123.46. So if you come to the dividend discount model, they're currently paying an annual dividend of 3.20. With a 6% growth rate, which is right above their 5-year average, which is about 5%, but their most recent dividend increase was over 6%. And I think that they can grow this dividend anywhere between 6 to 8% for the foreseeable future based upon the numbers and free cash flow growth that I've been seeing. So we're going to go ahead and give it a 6%, and then that way we'll give ourselves an 8.5% discount rate instead of 8%, which will bring us to $135.68. We need to change this to QCOM, and let's see where they're currently trading at as of today. So 144.10. So as you can see, a little bit of 6% difference. So you want to make that much money based upon the current price. So I'm probably not going to be invested in it currently. I sold out of QCOM at 140. That's just how I roll. Um, so Benjamin Graham, we have 8.79 over the last 12 months, 6% growth rate. For corporate bond, 12 PE, so we come to an intrinsic value of $116.61. If we come to our final valuation, 137, 135, 116 brings us to $129.33. And here's our discount rates. Here's the current price. My target buy zone, $110. Why is my target buy zone $110? Well, as you can see from the intrinsic value I calculated, that is a 15% discount. And in the past, I have bought in from 110, and if you did go look at their chart, you can see that QCOM has come down to the 110 and 120 range, mostly the 120 range multiple times. So I wouldn't even mind, buying up a couple shares here and there at 120, but my target buy zone would be $110. I think it would give me enough margin of safety, considering there is a lot of competition for QCOM. There's a lot of tailwinds. It is a strong market. Are they going to be able to survive? Are they going to continue to be able to be the giant that they are? Samsung is doing really good in this space. Apple is Apple. Then you got to think about Intel, like all these chip companies, all these things. Like yes, QCOM is more than a chip company, but that really is the key factor here for places like QCOM is, are they going to be able to keep up with the chip production? Are they going to be able to keep up with innovation and AI? And AI is really big for the next 10 years. Like that is the future. So there needs to be some kind of margin of safety, and I don't feel comfortable buying at $144 for a company that may be losing revenue. Like I said, most analyst targets the revenue growth is between 6 to 8%, but they've been declining their revenue from the highs that they've had because of the last couple of years of technology boost growth. But they've been having like negative 2%, 6%. They have been falling on the revenue. So is that revenue going to grow from current levels, or is it going to continue to shrink till it gets back to normalcy? Like, which direction is QCOM going to go? And for me personally, I need that margin of safety, so I'm going to be looking at $110. I'd be interested to hear what you guys think about QCOM. What do you see QCOM doing in the future? Where do you see them going? Do you think they can grow more than 6 to 8%? Do you think they're going to grow less? Where do you see enough margin of safety? For me, it's $110. This is not financial advice, but that's just how I see things, and I'm curious to see how you guys see things. Thank you.